Good evening, all. This is Shay Horowitz, ShogunTrading.com. Happy Mother's Day. Hope you had a great weekend. Hope you're able to use the time wisely. We have a new week in the market coming up. I've been very positive about the market. I've been very bullish about the market. I really think that the market is going to turn around and go into another uptrend. And the reason why I say that is because the market was showing all signs that that's what it wants to do. Plus, the Fed kid comes in and they really support the market, which, you never fight the Fed. But the last week put a little, I think gave us a little bit of a shake-up on that. We did pull back. This is a weekly chart of the S&P 500. This is the top pattern that we called when we called the top of the market, came down, and then it gave us a nice double bottom. Here's the head and shoulders, and here's the double bottom. But right now, we pulled back. Let me go into a daily chart. S&P 500, and this is the channel that we've been in for quite a while, and we've been basically drifting up above the 1400 level, and then we came back down and we closed below it. We closed below the 1388 as well, which was our resistance level before, which means we broke back down, and that's not good. That's not nice. Dow Jones Industrial Average, basically the same thing, also a very nice uptrend. Now we broke down. Now the thing about it is that's normal, that's okay. Pullback is completely normal in an uptrend. And as you can see, there was a pullback over here. We might get the same kind of pullback over here and come back up. 13,000 is a very big level. The problem is that we have two possible scenarios right now. We can come back down, go up, and keep going, just like it did over here. Or we can come down, go back up, not break the 13,000, make a lower top, and by making a lower top, start a new downtrend. And that can be, that can lead for another downtrend that can last a very long time. Especially if that leads to the point where we actually break all these support levels, break the 200-day moving average, and go into a longer-term downtrend. I personally don't think it's going to happen. There's a lot of bad news coming up right now. Oil is absolutely soaring. It's soaring because of all kinds of geopolitical reasons, because of supply, because of demand, because of everything along those lines. But it's also moving up quite a bit because of speculators. It was up 8% last week. And 8%, I don't think there was a change in supply and demand last week of 8%, which means a lot of it is speculation. The dollar has been weak, but I don't think it's going to be very weak for very long. There's the dollar chart, basically, US dollar index. And you can see that, it's starting to come off the bottom a little bit. Not a whole lot, but it is starting to come off the bottom. So I don't think that's really the reason why oil is soaring where it's soaring. Consumer debt came out, and that really worried me. Consumer credit came out, and they expected 6 and came out with 15. That means consumers are really tapping their credit cards, tapping their credit right now in order to pay for bills that they accumulated while the going was good. Not a very wise financial decision, but it is what it is. I'm hoping that all these problems are not going to translate into more of a downtrend, but we're going to be ready for it if it is. Our goal is to take advantage of the market wherever it goes. We've had a very short-term market over the last few months. This is what's going on, and you can see that it's not. We haven't had these kind of trends where very nice trends. We've had more of the choppy. Think about this as driving. If this is a highway where you can just set your cruise control and go, this is more of in-town driving. And whenever you go in town, you have to shift gears to lower gears. You have to use first, second, third gears, but reserve the fourth, fifth, and sometimes sixth gears for the trend. That means that you can't always use weekly charts and daily charts to trade. Sometimes you have to go down to the 60-minute charts in order to really accumulate those very nice quick gains. And that's what we've been doing lately. We've been accumulating a lot of those 1 day trades of 2%, 5%, sometimes even 10% in 1 day, just accumulating those. And if you're able to do those on a consistent basis every day, then you're accumulating quite a bit of percentage on a weekly. Instead of getting 10% in a month, if you're doing 5%, 2%, 10% all week long, then it accumulates quite well. I'll just give you a couple example. One of them was CRBC, for example. We shorted it at 804, and it came all the way down to 672 on Friday. It was down even lower than that, and that's quite a nice trade, and it's only a week. Another one, for example, is VLO. Broke to 47.16 all the way down to 44.55. If you can do that on a consistent basis, find those kind of trades that give you that kind of a quick profit that you can just bank. You take the profit and you bank it away. You take the profit and you bank it away. And it accumulates on a consistent basis, and it works very well. Because what happens right now is a lot of people are really getting frustrated because the market itself is not really moving. Look at S&P 500. You're not really seeing much. Mutual funds are not doing much. Hedge funds are not doing much because the market is not going anywhere. And that's when you have to shift gears. You have to have the ability to shift gears into the short-term type of trading in order to still make money in the market. And we've been able to do it on a pretty consistent basis because of the accuracy of the entry points, which I think is extremely important. Okay, so what's going to happen right now? I honestly don't know. What I'm going to watch out for is I'm going to watch the reaction to this, the fact that we broke down. If we bounce back up, I'll be watching for this top. If we bounce back up and break this resistance level, everything is still a go. We're still in an uptrend. Not exactly the best environment for a strong uptrend, but we're okay with a drift up. And I think once everything straightens out, once people gain confidence in the market again, I think we're going to go quite well. You also have to remember the interest rates are coming down, and that means that CDs and other savings accounts are not paying as much as they used to. People are going to be looking for alternatives, and I think the stock market is going to be a great alternative, as real estate is not exactly looking great. I do want to show you a couple stocks, and this is something that we do every once in a while. When I feel that there's pretty decent opportunities out there. I'm going to give you weekly charts. And we don't trade all that much on a weekly chart because we like the higher activity. We like the more consistent short-term profits. But I do want to show you two of them just to give you a little bit of a heads up. One of them is GNA. It's a steel company that... as you know, steel is doing pretty well right now, and you can see that the stock is capable of moving quite well. Excuse the horrible drawing. And now we have resistance again, and we have an uptrend and breaks resistance again, and it can go quite a bit. This was a 4 months trade, and it was a 60% trade, and I think we can do it again. So that's one of them. The second one I want to show you is Royal Caribbean Cruises. Cruises do spend quite a bit of money on fuel, and they do use discretionary money from people. So it could be a very, very nice trade. You can see the consolidation in the stock. There's a consolidation in the stock. There's first wave down, bouncing off support, break support again, could go down quite a bit. It's a $30 stock. I think it can go down to around $15. Anyway, every once in a while I'm going to give you some stock picks to look at on a longer term basis. It's not normally the term that we trade, but I think you will benefit from it. Watch the market this week. Watch how it reacts to the fact that we're not able to hold the 1,400 level on S&P 500, the 13,000 level on the Dow Jones Industrial Average, and we're not able to break the 2,000 level on the NDX. That's definitely not a good thing. Anyway, have a great week, and I will talk to you next weekend. Take care.